Good morning, everybody. We've awakened to a what would be characterized by Nassim Taleb as a black swan event. The Swiss National Bank last night took their interest rate from minus 25 basis points to minus 75 basis points. And they're trying to keep all these funds and dollars as scared money from flowing into Switzerland. And they're penalizing people. And people in spreads last night got clobbered. If you were on the wrong side of the Swiss franc spreads, you could be off $20,000 or more as you come in this morning per position or for outrights. So it's one of those events that all markets are subject to every 2 to 3 years. You can come back from it if the accounts are adequately capitalized. If you're not adequately capitalized, you are stopped out and the margin calls and the collection process begins. We're going to start off with the euro this morning. What happens in the overnight session is that when a news event like this happens, when they act, extremes come in because at that price point, the price is so low or so high, somebody just has to act. And what happens in Forex markets is there is no bidder offer. These large banks, they're very, very active in a trading range like this, and then when you break these trading ranges, there is no offer until something comes in at a different level. Then they're happy to trade. Whereas in the CNFT, in a futures contract market or exchange where everything is open, you'll see the liquidity up or down, and when all this liquidity is wiped out or taken, there are no more sellers or buyers, and the market will come back in the range, and that's where we are right now. So if the euro can stay above 116.70 today, then it can come back a little bit, but it's not going to rally or break out to the upside, in my opinion. It's still a long-term sell. And you can see right here that this price point is in play, and these price points are in play. Structurally, 1760, 1775 area, basically where we were yesterday, 118, 1775 to 118 is probably pretty stout resistance. And then our 1750. So our first sell is going to be in the 1750 area, and our second sell is going to be in the 1775, 118 level. On the buy side, you got to give it some room. We're talking about 1675 to 85 buy one, and if we break 1670, we don't want the trade. Now, what's going to happen is on our day session opening right here at 10 minutes, large institutions that are on the wrong side of the market dump on the opening. In the stock market and the futures market, they tend to liquidate on the close. So if we can get through the opening without major damage being done on Swiss franc positions, then these people will be selling or buying at record levels, and once that's out of the way, then we're going to see what the market is, and you'll see it better on the CME contract than you will on the than you will in the Forex markets. Well, on the spread market, everybody was the Swiss franc, and they were on the opposite side of it. So that could have been the dealers supplying liquidity, I guess. I have to go back and take a look at it. Thanks, Reg. Calgary made the news last night. Housing prices are down due to the change in the industry. So we will get on and take a look at our markets now. But this is one of those days where now we know why the financials in gold were holding up so well, in spite of news that normally would take them lower. Somebody always knows what's happening. And it's not that they take the opposite side of the market, but you take a short, or you take a large or a size short or a size long out of the market. And that's where we are. So 1750 plus or minus is a sell, and 1775, 11775 to 1.18 would be a sell on the euro. On the buy side, we're just going to leave it at 1.1675 plus or minus. Okay, on to the financials. Today normally is settlement day for this week's auctions. Market, and I've gone to 1/32 increments right here, tends to be in a trading range today. And we came in last night wanting to buy into weakness and wanted to sell into strength. That's where we are. So again, you can see that the Swiss bank announcement right there took the market higher. We were not able to go through 130.08, so there's a good chance that 30.08 will hold. So selling failure to take out 30.08 is probably the easiest trade to see. On the buy side, we've got our 24 to 28 is going to be our first support area, our buy area. So it's 29 to 25. And then the news hit all the way down here at 13. So leaning against that 12 to 13 area, 17 to 13 will be buy too. And it's a pretty wide spread for us, but it's what we're dealing with. This is a day where it's really hard to know exactly what to do. We got to let the Swiss franc catastrophe sort itself out, so we can open it up at the edges. But my guess is we're probably going to hold the range today on a risk-off flight to quality. Jobless claims 295. PPI, we love this, -0.4. Core, I've seen plus 1% to plus 0.2, so plus 0.1. Empire Manufacturing, all this news hits at the same time. 5. Philly Fed 20. And natural gas inventories at -220. I saw some weather reports early this morning that new cold wave will be moving into the upper Midwest and Northeast over the weekend. We're going to get a warm-up out here as that bulge moves from the West Coast into the interior. So the news focus will be jobless claims, Empire Manufacturing Index, then Philly Fed in that order. So kind of makes you glad that you're a day trader, right? We don't have to this. We do intraday, and we can, if you're close to the market, that liquidity is there. If you're far from the market with a disaster stop, the large market makers can hit the cancel button and from those particular trades. So again, having your stops pretty close to the market is actually protective in these situations. It's not as bad. So we got our 24 to 28 sell failure to take that out. Then we have yesterday's 3 to 7 for sell 2. Same news will impact this. We got volume at 14. We've got a low down here at 01. We've got another low at 15. So 13 to 9, buy 1. Pretty aggressive, but it puts us in this area right here. And then we'll open it up 29 to 01 for buy 2. I have never personally experienced this type of situation. I've gone through it with many people, and it's gut-wrenching. It makes you question your whole existence. And that's the one thing about futures that people really don't appreciate, is that it can happen in the blink of an eye. And leverage works well when you're right. It doesn't work. It's not so much fun when you're wrong. And we just can't forget that. So you really have to, with all the manipulation and all the stuff that goes on in today's markets, with all these large players coming in and taking advantage, overwhelming it, with the blessings of the regulatory agencies. You know, Jamie Dimon gets out and howls about all these fines and what's hurting his bottom lines, all these fines. He doesn't talk about why these fines are generated, why his firm is catching all these fines. And about half of it's through outright market manipulation, and about half of it comes from the government forcing these banks to do stuff that they wouldn't normally do. And the deal with the government and the regulatory agencies is, well, we'll pay the fines, you'll allow us to make enough money to pay the fines, but you won't put us out of business and send us to jail. I'm not saying the fix is in, but it's about as close as you could have to that. And the people that get put out of business are those firms that are not big enough or not too large to fail. So when we talked about gold last week, we talked about this area right in here, this 1257 to 1262, and then we had these highs all the way up here at 77, so our 72, 77. This was the, and we're there, we're knocking distance. So we've rejected prices at 58. That's where resistance is. So $58 to $60. Sell 1. Our 65 would be sell 2. 65 to 67. On the buy side, basically 50 is where we are, so buying 50 plus or minus. Then we have the breakout down here at 45, 45. So 45 to 50 is going to be pretty good support, and we'll see what we've got. Again, the easiest trade to see is going to be failure to make new highs today. But there is, when you see something like this happening, it can be very discomforting. And you think of yourself as, you know, gee, what would I do in these particular situations? And you do what you have to do. I mean, it's like in an airplane. If you have an engine fire, you take the necessary steps. You repair the position, the rest of it, then you come back and reassess and see what you did wrong. And there are some things that you have absolutely no control over, and this obviously would be one of them. The Swiss National Bank did this to the world, and with no warning, no trial balloons, no nothing. And these large players can do it. You see Russia used to game the energy markets right and left. So it happens. It's a fact of life, and that's what makes day trading with stops relatively close to the market, while it is the most difficult way to trade. It also carries the least amount of collective or large risk. There's less large risk associated with it, especially if you're not playing with disaster stops. Okay, why is crude up like this, given what's going on in the Swiss franc? People covering shorts, covering profitable positions to pay off their currency problems. Fundamentally, this doesn't change anything. Fundamentally, it tells you that Switzerland is afraid of a recession / depression, deflation. They're trying to keep people from sending money to their country, right and left. They have their stock market's off 15%. They just added 15% to the cost of all Swiss goods, and most Swiss goods are for export. So they're exporting companies, which most of the Swiss companies are going to be clobbered on this. I mean, it's really a draconian move, but it was done to protect Switzerland from all this cash that's pouring into their country right now, because people are scared to death about what's coming up. So we've been talking about getting back to 50 for a long time. So we're going to have to get through the day session opening. We're going to see how many shorts cover. We have to get through that first move, whatever it happens to be. Then we're going to know what we have. So this 50 area is an area that we can pay attention to. Then 50-50 would be sell 2. So 50-50. It's quite a run, $44 all the way up, $45 minus all the way up to here. It's a $5 run, $6 would take us to 51. On the buy side, you have to feel that 49 and a quarter is where support is right now. And if we can get it down there, that's probably a reasonable buy. And then the breakout, this 48.50, 48.75 for buy 2. But again, profitable position, short covering in crude is probably where we are right now. And so we'll see shorts cover on the opening when there's some liquidity. Once that's over, it probably sets up a pretty damn good sell. You can't panic in these situations. You can't be your worst possible fill usually is on the opening, but sometimes it never stops off the opening, and that's why large institutions just dump on the opening and take their lumps and start the game over again. Okay, what does this do to our stock market? Well, if you're looking for places for investments or protection and for transparency and for a central bank that floats a lot of trial balloons, it actually would encourage money coming into the United States, and we see that in the financials. The stock market, what Switzerland did, tells you that recession, economic slowdown, etc., is what they see coming. And if they see it coming, it's pretty easy call to make in the EU because of what's going on over there, but because about 30% of every international company comes from international trade, then it will affect us too. So if Europe goes into recession, it'll certainly slow growth. Back in the old days, the United States used to be able to miss a lot of that. We could stand on our own back before there was so much international trade. So it doesn't necessarily take our growth rates to zero, but it does impact them, as does negative crude prices impact them. So right now, a lot of people will be watching crude oil to see if how it acts at 50 bucks. And if $50 is rejected and starts back down, that could hurt the stock market. Right now, we know there's a seller in the 25 to 30 area. We're right back in that same situation that we had been. We also know that there's a buyer in the 85 to 87, and here we are kind of right in the middle. So our first sell zone is going to be 10 to 12. And then our second one is going to be 19 to 20. We're going to open it up a little bit, and we'll have to adjust as we move along. Our first buy zone is going to be in this 95, 97, and we'll adjust. We'll pull these in. Obviously, 2,000 is a number. We'll put a question mark by that. And then we're going to 587 for buy 2, and we'll tighten this up. But right now, it's just really difficult to say what we're going to get. And you just kind of have to let the dust settle. We'll have a better feel after the first hour. There's a lot of money to be made on these type of openings, this kind of volatility, especially if you're a short-term trader. For the position trader and the rest of it, it's more problematic. So that's where we are. Jobless claims, 295. Nobody will pay any attention to PPI, minus 0.4. Core, plus 0.1. Empire Manufacturing Index, this could come in lower than forecast, 5.0. Philly Fed at 20, that could come in lower than forecast. And then natural gas inventories at 224 with another cold wave forecast for next week. So natural gas should trade up out of all of this. So here we are, 7 minutes into the market. We'll go back and we'll see what happens, and I'll be with you as soon as I can. It's going to take at least 20 minutes to get everything up and posted.